GSTN has always endeavored to outreach tax officials and taxpayers for more knowledge dissemination among them on it. Now we will come to the our topic for today, which is tax deduction at source. And any topic which we cover will be incomplete unless we covered certain silent features of the income tax. So what we are going to do is that we are going to cover salient features of TDS provisions in the income tax. So in GST law, it has been provided that in the GST law, the tax deduction at source has been taken in lines with the income tax provisions. So that law that has been studied and in a particular manner has been brought into GST Act now. So what is tax deduction account number or tax collection account number? It's a 10-digit alphanumeric number which is issued by the income tax department. And as per the incomes, whatever we are going to cover in next 3 slides is as per the income tax law. So TAN to be obtained by all persons who are responsible for deducting tax at source or who are required to collect tax at source. So anybody who has to collect tax at source, which is provided by GST law, has to get a TAN, and that TAN is being given by the income tax department. So as per section 203A of the Income Tax Act 1961, every person who collects or deducts tax at source must have a TAN, and it is as per the section 203A of the income tax, it is mandatory to quote TAN in following documents like TDS return, TCS statements, or annual information return, which is filed in the income tax. These are the TAN is mandatory. So, and the income tax provision also provides that the government deductors must have a TAN, and PAN cannot be quoted in place of TAN. So a government deductor has to quote a TAN, and a taxpayer, a taxpayer cannot have more than one TAN. So if we have one office which has to deduct tax at source under GST law, then that office should have one TAN with it, and that should be unique. And if there are different branches and different divisions or entities, then they will have separate TAN with them. And in case more than one TAN has been allotted, then the TAN which is being used regularly should be continued, and the other TAN, if there are with the offices, should be surrendered using the form for changes or correction in TAN. So what we have covered right now are the provisions which is given for TAN in the income tax provisions. So now we are going to do is into the GST provision. We have covered the brief about GSTN and income tax provisions relating to TDS. Now we will cover the GST provision. We will start with the registration, and then we will go into returns and other provisions. So the next slide you see is structure of TAN. So the first 2-digit structure of the GSTIN number or the TAN number, which will be given to the tax authorities. So the first 2 digit is the state code. So as whatever is the name of the state, that should be the first 2 digits, followed by 10-digit tax deduction account number. 13th is an entity code, 14th is a blank digit, and 15th is a checksum digit. So if you see the structure of the TAN, the first 4 digits of the TAN are alphabets, and the next 5 digits are numeric, and the last digit is an alphabet again. So the first 3 digits represent the jurisdiction code. 4th alphabet is the initial of the name of the TAN holder, who could be a company, firm, individual, or any government authority. For example, if a TAN is allotted to Mr. Mahesh of Delhi, then his TAN will appear like this. So the first 3 digits will be DEL, which will be the state code, a jurisdiction code, followed by first name, his first name, which is Mahesh. M is the first name, followed by 5 numerical digit and 1 alphabetical digit. So if you see, the top line shows the GSTIN number, which will be given to a tax deductor of the GST regime. So that's how your TAN GSTIN is going to look like, which is completely based on TAN. So what are the provisions of the GST Act which is applicable and which initiates or starts the applicability of tax liability on a particular authority? So the section 51 of the GST Act says that the government may mandate government may mandate following class of the persons. There are 4 class which is mentioned over here. The first class is a department or establishment of the central government of state. So the government may mandate a department or establishment of the central government or state government or any local authority or government agencies. So these are the categories which have been defined in the GST Act. And the last one is a category which is being notified by the government on the recommendation of the council. So this is a 4 categories in which the persons are required to obtain a TAN and get a GSTIN registration number for what? For doing tax deduction at source. So government may mandate these 4 authorities for doing tax deduction at source. This is section 51 of the GST Act. Then section 24(6) of the CGST Act says that persons who are required to deduct tax under section 52 are required to register under GST. So in place of TAN, 25(6) section 25(6) says that in this place of PAN they have to indicate their TAN. But you remember in the case of income tax authorities, a provision that has been clearly indicated, anybody who is doing tax deduction at source or tax collection at source, they have to mandatory get a TAN number. Then obtaining TAN number under income tax is mandatory, as we have covered earlier also. And what after obtaining TAN, what a tax authority, those 4 tax authorities have to do is this, that they have to electronically submit an application, duly signed. So signature is either to a DSC or through ESC. So after doing that, they have to submit an application for registration under form GST Reg 07. So all the forms which I am mentioning over here are still under discussion. So I will not be able to show you the forms, but I can show you about the various provisions of the GST Act which is applicable to TDS and which will be shown to you. So the TDS deductee has to come to the GST portal for making a registration application. He has to go to income tax portal to get a TAN number, and then he has to come to a GST portal for getting a GSTI number to comply with the GST regime. So he will apply in the form GST Reg 07 either directly, he can do it directly himself, you create a user ID and password and create that, or he can use a facilitation center notified by the commissioner and use that facility to upload his form for registration. Then that form will be sent to a proper officer, as we have shown in the first part of the presentation. That proper officer will grant registration after due verification, and the certificate will be issued in the form GST Reg 06 within 3 working days of the date of submission of application. And proper officer, if he so wishes, can ask for certain clarification also, which applicant has to reply. And after the receipt of the reply of the applicant, the proper officer has to issue the registration application within 3 days. Now we will cover a slightly bad part of it, cancellation of registration certificate. So the first part does not cover it. The first bullet point is regarding if there is any change in information furnished by the applicant. So if an applicant is there, he is already registered, and there is a change in certain information of the applicant, then he has to submit. Then he has to submit the changes in the information in form GST Reg 13 along with the documents. So if there is any change in the registration certificate or the information submitted, then you have to resubmit using form GST Reg 13. And all these forms will be communicated and will be in the public domain after some time. They are still under deliberation. Now, cancellation of registration certificate is covered under Rule 5.3 of the draft registration rules. So it says that this law is not only applicable to TDS, but it is also applicable to everybody. Like if any application of registration has come, then this Rule 5.3 will be applicable. So it says that if in pursuant to any inquiry or any proceedings under this Act, the proper officer is satisfied that the certificate of registration is no longer liable to deduct tax at source under section 51 or collect tax at source under section 52, that said officer may cancel the registration issued and such cancellation shall be communicated in the form Reg 08. So this particular provision, if you see Rule 5.3 has been drafted in such a manner that this empowers proper officer to cancel registration for TDS or TCS, tax deducted at source or tax collected at source. So this is not applicable to the normal taxpayer as of now. But if you see the provided proviso which is given, that the proper officer shall follow the procedure prescribed under Rule 14 of the cancellation of registration. We are not going to cover that because that is a very specific topic to be covered. But what it basically says is that there is going to be a due opportunity to the applicant or to the registrant to give his point of view. And after receipt of that point of view, the tax officer is going to pass an order. That order will be an appealable order, in the sense that if a TCS or TDS registrant wants that this order is appealable, or he is not satisfied with the order, then he can go and appeal against that particular order. So that's cover the registration parts of the TDS of the GST law. Now we will come under the what is the TDS, or the person who has got his registration is required to do. So what he is required to do is that he has to deduct tax at the rate of 1% from the payment made or credited to the supplier in case of intra-state supply. So he is going to deduct 1% of CGST and 1% of SGST. So the total deduction will be 2%. If 2% of the tax. And when the deduction is to be made is that when total value of such supply under a contract exceeds 2,50,000 rupees. So if you are getting a supply of 2,50,000 rupees and such supply is under a contract, then you have to deduct 2% tax on it. 1% of the tax will be CGST and 1% of the tax will be SGST. And you have to deposit this tax in the account of the government. No tax deduction of the source is to be done if the location of the supplier and the place of the supply is in a state /UT different from state UT of the registrant of the application recipient. Now the question arises, why this is so? This is so because in such supplies IGST will be applicable, and then we will have to go to IGST Act for the applicability of the tax. So the value of supply, if you see the last point, excludes any central tax, state tax, UT tax, integrated tax, and cess indicated in the invoice. So this amount has to be excluded. When we have excluded all this amount, and then the value of the supply is whatever is the value of the supply, we have to deduct 2% of the tax from that value, and we have to credit this to the government. So that's what the section 51 of the CGST Act says. So as you can see, the similar provision of the tax deduction at source has been given in SGST bill. So there also, and into UT GST bill also. So that's where 1% is mentioned. And in case of interstate supply, the rate of 2% has been mentioned. So that's what we have covered in the last slide also. Then what, after deduction of tax, what is to be done by the deductor? So deductor has to pay this particular amount within 10 days after the month in which such deduction is made in the prescribed manner. So this is section 51(2) of the CGST Act. The CGST Act 51, section 51(2) says that the tax has to be paid to the government within 10 days after the month in which such deduction is being made. So even if supply has been made earlier or supply is made later, if you had made any deduction in a particular month, you actually pay this particular tax into the next month into the government kitty. So that's cover the TDS part. So what we have covered is how you have to register, who you have to register, and what you have to collect tax on. Now, what we have also covered partly is that you have to give this money back to the government by depositing it by the 10th of the next month. Now we will cover the return part of the tax deductor. So as you can see, as per section 39(3) of the CGST Act, so every person, registered person who is required to deduct tax at source under section 51 shall furnish a return in form GSTR 7 electronically through the common portal. within 10 days after the end of such each month. So if you see, there are a few points into this. First is that those persons, every registered person required to deduct tax at source. So if you are required to tax deduct at source, as per section 51 of the CGST Act, you have to file a return in form GSTR 7. And how you have to file is not manually, but electronically onto the GST portal. And up to what time you have to do? Within the 10 days of the end of the month. So if we are talking about the month of, say, April, I have still 2 more days to file my return, 1 more days to file my return. So I can file my return for all deductions made in April 2017 by 10th of May 2017. So the details furnished by the deductor under sub-rule 1, whatever details are being given by deductor, shall be made available electronically to each of the supplier. So if a tax deductor has deducted tax TDS for 10 of the suppliers, then for each of the suppliers in part C of form GSTR 2A, that particular column and that particular information will be populated. So that's how the supplier will come to know that the tax has been deducted, and he will be able to get this particular information through GSTR 7 being filed by the tax deductor. So that information will flow into GSTR 2A of the person from whom the TDS was collected, and this will appear in his GSTR 2A after due date of filing of GSTR 7, which is the 10th of the following month. Then, as per the section of 51(3), the certificate is to be issued by the deductee to the deductor that this particular amount of has been deducted as tax. So the portal, as per the development of the GST portal, this will be automatically generated, and this certificate will be available to the supplier in the form of GSTR 7A on the basis of the return which is being furnished under sub-rule 1. So what is very important is that the deductor should file GSTR 7 so that the information of the tax deducted at source is communicated back to the supplier, and he is also able to see that deduction at source, tax deduction at source certificate in his GSTR 7A. So as we have discussed, section 51(3) provides that CGST Acts provides that the issuance of TDS certificate to the deductee by the deductor within 5 days of crediting the amount so deducted to the appropriate government. The certificate will indicate the contract value, rate of deduction, amount deducted, etc. And in case there is a failure to furnish TDS certificate to the deductee within 5 days of crediting the amount so deducted to the government, a late fee of ₹100 per day will be levied until the failure is rectified. So if failure continues for 10 days, then the tax will be a late fee of ₹1,000 will be levied. But if this failure continues for more than 50 days, then even then 5,000 rupees only will be levied on the person. So the fee has a maximum limit of 5,000 rupees and a minimum rupees of 100 rupees per day. So that's what deductee might have to pay if he's not filing the return, or he's not able to pay up to the government within the time limit provided, or he's not able to provide the deductee the required certificate. So this covers the return part of the TDS. Now we will cover the miscellaneous provisions related to TDS and the GST. So as you know that the TDS has to be paid to the government within 10 days after the end of the month in which the deduction has been made in the prescribed manner. So the prescribed manner is that the tax deductee will go to the GST portal and he will create a challan, and using that challan he will pay the amount, whether it is CGST, IGST or SGST which has been deducted, or cess which has been deducted. And if there is any failure on the part of the deductor to the payment to pay the amount of TDS to the credit of the government, then interest will also be levied. We will see the provisions of interest later on. And if there is if the amount of default will be determined under section 73 or 74 of the CGST law, so which will also be covered later on. So these are the information which will be a deductor which will be required to file on this. So what he will have to do is that he will have to provide TDS details, then he will have to provide revision in the TDS details, Then if there is any liability to be paid or which remains unpaid, then refund claimed, or anything which is there, which will be shown by the deductor in his returns. Then tax deductor is required to electronically sign the declaration and then submit the return to the GST portal. So this is given so that he certifies that the information whichever is given is correct, and which has been furnished by him is correct. Then return for further period cannot be filed, as you know, as per section 3910 of the CGST Act, if return for the previous period has not been filed. So these are the provisions which are there in the GST Act. So to comply with that, we should be very clear, and we should follow each one of them carefully. So how payment of the tax deducted has to be done? So after using a challan, tax is paid to the government. Then that amount will be used for debiting the electronic cash ledger, and automatically the electronic tax liability register of the deductee will be credited. So that's how the smooth flow of the payment module will work. The tax will be paid to the government through a GST portal, and the challan detail will be sent to the bank. As soon as the confirmation is received from the bank, then electronic cash ledger of the deductee will be updated, and after he makes the debit in the electronic cash ledger, the electronic tax liability register of the deductee will also be updated. So that's going to be automatic. So just wanted to let you know that we are going to slightly exceed the time, but I hope that is okay, and we will request you to continue. So any amount which has been deducted under section 51, as I mentioned, will be claimed by the deductee in the form GSTR2, from whom the said amount was deducted or collected, and will be credited to his electronic cash ledger, so that he can use that particular information for making further payments. And if there is a delay payment of tax of the deductee, which is deducting tax at source, then interest up to 18% is liable to be paid as per section 50 of the CGST Act. Regarding refund, if there is any tax which has been extra collected, or deductee is liable for any refund, then he has to apply for refund under section 51(8) of the CGST Act, and the process under that has to be followed. But the only issue is that only that amount of refund can be asked by the deductor if that amount has not been credited to the electronic cash ledger of the deductee. So if the amount has been if deductee feels that he is liable to refund, but he has shown it in the return, and it has been updated into the electronic cash ledger of the deductee, then deductor will not be entitled for a refund as per section 51(8) of the CGST Acts. So now what we are going to cover is that offenses and penalties. Why we have done is that you should know about it, so that you are aware what are the provisions which come into play if such kind of situation happens. Nobody will be deliberately doing it, but you should be aware of it. So if a tax deductor fails to deduct the tax, so either you have made a payment of 2,50,000 or more, and you have not deducted tax at source, and or you deduct an amount which is less, so you're liable to deduct a tax of 100 rupees. You only deducted a amount of 75 rupees, or you have failed to pay the tax to the government. Then the amount deducted as tax, whatever amount which was supposed to be paid to the government after you have made the deduction, then you will be liable to a penalty of 10,000 rupees, or an amount equivalent to the tax evaded, or the tax not deducted under section 51, or short deducted, or deducted but not paid to the government. So there are three aspects to it. One is that tax deductor either failed to deduct, or it has deducted the amount which is less, or he fails to the government. Then he is liable to pay a penalty of 10,000 rupees, or an amount equivalent to the tax which has not been deducted or evaded or not paid up. So that's the offense and penalty section. Then there is a demand and recovery section which is covered in section 73, which shows that which says that a show cause notice can be issued for demand of amount which is not paid, short paid, or erroneously refunded, or input tax credit has been wrongly availed or utilized. Then this can be done within 3 months prior to the time limit issuance specified for issuance of order, and subsequent for if any there is any subsequent state notices to be issued, then statements can be issued. And if the person who is liable, to whom show cause notice has been issued, he pays up the amount along with interest, then no show cause notice will be served served to him. And penalty which has been envisaged in section 73 is penalty of rupees 10,000 or 10% of tax, whichever is higher. And the order is to be issued within 3 years from the date of filing of the annual return for the subject financial year. And the show cause notice, if you go back to the point number 2, has to be issued 3 months prior to the time limit specified for issuance of order. So this covers section 74. The difference between section 73 and 74 is only in the manner of fraud, willful misstatement, or suppression of facts. Like in the first thing, the same thing is there. Like if there is short payment of tax or short, there is a evasion of tax, but with intention of fraud, willful misstatement, or suppression of facts, then section 74 comes into play. And there are certain difference in the penalty which can be imposed, or the show cause notice which can be issued. So a show cause notice has to be issued within before to 6 months of the time limit for issuance of order. And the tax amount, penalty amount has also been given, that it should be 15% of the tax if it is on the own ascertainment of the party. And even after issuance of notice, he has an option to pay the tax, interest and penalty of the 25% amount within 30 days of the issue of the notice. So this is my last slide. So this covers the transition provision under tax deducted at source. So where if you see is that where a supplier has made any sale of the goods in respect of which tax was required to be deducted at source under any law of a state or union territory relating to value added tax. So what is happening is that in the current provision, if that goods were liable to tax and any sale of goods has been made under that particular law, and he has also issued an invoice for the same before the appointed date. So if invoice has been issued on 20th of June 2017, which is going to come next month, then no deduction of tax at source under section 51 shall be made by the deductor under the said section, where payment to the said supplier is made on or after the appointed date. So even if you are making payment after the appointed date, that there is the 1st of July, then no tax is to be deducted under section 51. So section 51 excludes certain provisions. One is that sale has been made. One. Second, it is made under the existing law. And third, invoice has been issued before 30th of June. Then in all three cases, if all three conditions are satisfied and payment is made after 1st of July, then you need not deduct any tax TDS under section 51. That's what the transition provision has been provided for. So that's all from my side. Thank you very much. And I hope that this was very useful to you. So some of the questions have come up. I will answer one or two of them. And then rest of the questions will be replied by to you later on. So is online shopping affected in any way? So first question is online shopping affected in any way? So shopping is on whether the shopping is to be done online or it should be done in any other manner is to be done by the government, like in the sense that the government makes the provision that either you do it through either you can do it through floating a tender or any other way. So that is provided by the government. So you have to do it through the provision which has been guidelines which have been issued by your government, maybe state government and central government. So online shopping is not affected. If you want to order online, you can do that as per the existing provision. But the provision of the CGST etc. only provides that you have to deduct tax at source of around 2%, 1% CGST, 1% SGST, or 2% of SGST. So that's what you will have to do. And regarding TCS or e-commerce or tax collection at source, that is a separate chapter altogether that is to be done under section 52. So we are not talking about that in this particular date. So how can taxpayer amend his return in case of any error? So amendment section has been provided in the return. So for the next month of return, if he wants to amend, he can amend his details, and that he can do in the next month. So the next question, one of the question is up to how much amount turnover there will be no GST. So this is not applicable in this particular case, as the provision says that if you are getting a supply of more than 2.5 lakh of rupees, you have to make a tax deduction at source. So you have to get registered if you are getting a supply of more than 2,50,000, and if it has been provisioned by the government that you should register, you must register and you must deduct tax. So it is not applicable about the supplier, it is applicable to you. If you are getting any supply of more than 2,50,000, you are supposed to collect a tax deduction of source of 2%. Now, one of the question is which term is used for ITC in GST. So ITC mentions input tax credit, which means that the tax, whatever tax we have been deducting, is available to the supplier for taking as a credit and using that tax for making further payments. So that is input tax credit. So in a normal situation, what happens is that the supplier pays tax, and that tax flows to the that invoice goes to the receiver, and the receiver takes input tax credit of that. So ITC means input tax credit. So that's all from our side. Thank you very much. I hope this was useful to you. I again want to thank Mr. Rao and his team, and my team over here, Neera Tamta, Mr. Pankaj, Jagmal Singh, Praveen Kumar. Thank you very much. Thank you, Harsh, everybody. Thanks a lot. Over to you, Mr. Rao. Thank you very much.
Thank you, sir. Thanks for this wonderful session. And now, Shalini, could you like to give some inputs?
Thanks for wonderful audience around. Once again, thank you so much for the together learning that we had from this session. There are plenty of questions which are coming around, which with the reference of the time that we have here, we would like to restrict ourselves from here. And the questions will all be answered through that as well. We would like to answer your questions and queries through our KMS portal, and hope you had a good learning. There is a poll which has already been showing on your windows. If you can actually reply to that, it will be helpful for us for giving you a better quality and better delivery next time, as well as the learning is a never-ending journey for each one of us. Good night, Shabba Khair. Have a very good day, whichever is left now. Have a good day. Thank you so much.
Thanks, sir.